line with the discussion, I will put emphasis on a couple of parts and slides of my presentation only. Since I'm an economist, I'm risk averse. And therefore, I prepared the presentation in the case that I don't find the words so that I can read them. Okay, so I go through it more briefly in the first slides, and then come at the end of the presentation to the main points, and I will give some additional information during the slides. I'm coming from a country that seems to be a kind of paradise from your perspective, because we have public banks since the 18th century, and this tradition works quite well for all the customers. Savings banks in Germany, public banks in Germany, are a very good invention that we made in the 18th century. But for politicians, especially for European politicians, it's very hard to understand what is the main privilege of a public bank, and what is the main idea of public banks. And although most of them are politicians, they don't trust in public banks, and I wonder why that is so. Okay, but maybe we find out. So let's look at the first 3 or 4 slides. They're very, very simple, and I skip them because they are so simple. Maybe you get access to the presentation on the homepage of the institution that is in charge for this event. So I go through it. It's just a mechanism to distinguish different banking systems from each other. And the banking system in America is completely different to the banking system in Germany. And therefore, it is useful just to distinguish the differences and to find out where maybe there are lacks or something like that. So this is a model how to characterize banking systems. Ownership is a criterion, business model and size, and I go through it very briefly and go to the structure of the German banking system. And all these 3 criteria are in the structure of the German banking system. And it's called a 3-pillar system because we have 3 different groups of operating institutions. And the first one is that you almost only have in America private credit banks that are, big banks. There are some regional operating banks. There are all the private banks, and there are, of course, foreign bank subsidiaries. These big banks are really big banks. I come back to this later. The largest bank in Germany, Deutsche Bank, you may have heard about it. When we talked about private banks and globally operating banks to be criminals, well, this is the most criminal bank in Europe, maybe even in the world. Yes, yeah, they're bad. They just exchanged their complete directory and their complete board of directors because they are all more or less corrupt or something like that, maybe, whatever you call it. So the largest bank in Germany has a market share of around about 20% in total assets. Okay, 20% with one single bank. And that is, for a rather small country as Germany is, this is a real burden for the complete system. The second one is the pillar that I'm talking about. Credit institutions under public law. I'm an economist and I'm not a lawyer and a law expert. But Germany is one of the very few countries in the world that have a particular public law. It's absolutely ridiculous. Nobody understands it. Even the German lawyers do not understand it. If you look at German lawyers, there are very, very rarely lawyers that are concentrating on public law. And these public institutions are savings banks. Okay? We call them in German Sparkassen. And be careful when you use the translation savings banks. Sparkassen in Germany, public banks in Germany, have nothing to do with savings and loans institutions in America. They are completely different. Only the translation from German to English is savings bank. So I use the term savings bank, but keep in mind that a German savings bank has nothing to do and nothing in common with savings and loans. So these are the small institutions, and there are what we call Landesbank companies, and these Landesbank companies had been established after World War II, and they've worked and functions as a kind of central banks for local Sparkassen. I come back to this later. So just to understand this structure inside the credit institutions under public law, I don't go to regional building societies. That doesn't matter. And the third pillar in Germany are cooperative banks. I only mention them but go no deeper into it. Cooperative banks, really similar to cooperatives in the US too. So all credit institutions, all these three different kinds of credit institutions in Germany are subject to German Banking Act and to the supervision of the Federal Financial Supervisory Authority. And in the next level above all these regulations is the ECB, the European Central Bank. That is the executive regulatory authority in Europe, and all these three different pillars of the German banking system are due to exactly the same regulations. It doesn't matter whether it is a big bank with $1,600 billion total assets or a very small cooperative bank with a 50 million in total assets. So they are all treated exactly identical. And their only difference is the ownership and the corporate governance. All of them are universal banks, and there are, of course, some special institutions in Germany, but we stick to the universal banks. Each of the three pillars has its own guarantee system, its own liability system. That is important to mention. So just to compare Germany with the US, so you have an idea about the figures, we have 81 million population. So I learned it's a fourth of American population. GDP is a third of American size, but total assets are only 50% of American size. So banking in Germany is much more important than banking in America. And the number of banks is nowadays 1,695, and the regulation authority is the European Central Bank. 20 years ago, we had about 5,000 independent banks in Germany. Now we have only 1,695. So I went through it with the different kinds of public banks. I pointed out that the Deutsche Bank with 1,600 billion total assets is the largest one, and I go back to the core of principles of public banks. So all the public banks in Germany have a obligation, a public service obligation and a social commitment. Sparkassen, savings banks are public welfare-oriented institutions, and their aim is a sustainable economy and a sustainable development of real economy. And Sparkassen are not state banks. So the responsible public bodies are municipalities, but these municipalities only are part in a board of directors. The managers and the management of the bank is completely without any influence of the board of directors. Okay? So this is the note I pointed out. We have a German Savings Bank Association in Germany that represents all the public banks, and they constitute what we call the Savings Bank Finance Group. And in this Savings Bank Finance Group there are the local Sparkassen, the Landesbanken, and some additional institutions, and they have in common the public legal form, a municipal trusteeship, the public mandate, and that is very, very important, a regional principle. That means a Sparkasse in Germany is only operating in a more or less small region, in a county, for example, or in a large town. For example, Hamburg, second largest town in Germany with 1.8 million in population, has the largest savings bank in Germany, 45 billion in total assets, and it's one of the 30 largest banks in Germany. So this is a Sparkasse that is only operating in Hamburg. Okay, it's not operating in their neighbor counties, it's only operating in Hamburg, and this regional principle is by law. So that cannot be easily changed, it's a law in Germany. So they have all the same public service obligation. The public mandate is regulated by law in each state. And each state has a Savings Bank Act. This looks a bit funny here. I guess this is PowerPoint. Well, we should have used the PDF files. So the welfare-oriented business policy I pointed out already, and the municipal trusteeship strengthens group solidarity. I skip the next one. This is quite important. The Savings Bank Finance Group is Germany's largest non-governmental sponsor of art and culture and largest non-governmental sports sponsor. Whether this is a good or a bad thing, you may think about it. One of the country's largest sponsors in the social sector. That is, I think, a good feature, and one of the country's largest scholarship sponsors. Okay, so you see that the emphasis on the business model is quite different to private banks. 416 savings banks, the largest, Hamburger Sparkasse, 42 billion, smallest 123, and 240,000 employees, trainees, branch offices, and so on. I don't have to read it. With 1,127 billion total assets, it's smaller than Deutsche Bank. It's smaller, okay? But these savings banks are only regionally operating, and Deutsche Bank is globally and nationwide operating. So this is what I take the last minutes for. It looks very, very complicated, but it's very easy to interpret. And just look at the red columns here. And the red columns are the market shares of the German public banks in particular criteria, in particular markets. So, if you look at self-employed and business loans in Germany, all of the self-employed and business loans in Germany make up for round about 850 billion. 43.4% of all these loans are made by Sparkassen. Yeah? Just this figure, 43.4%. The total share is 100%, and 43.4% are made by the Savings Bank Finance Group. So, market share of rather 50% for self-employed and business loans. And it's a very large market share for trade loans, but their impact in total lending is rather small, and we find another very large market share for the Savings Bank Finance Group for loans to domestic public authorities. So especially what we call the Landesbanken are the financer of public authorities, of local and domestic public authorities, and their market share here is 40.8%. And if you look at total loans to domestic non-banks, the market share of the Savings Bank Group is almost 40%, and the credit bank sector makes up only 30% of all these loans in this sector. Okay, just look at the red columns and look at the figures in these red columns, and you see the market share of savings banks, of the Savings Bank Group in Germany, in these different markets. And the same is true if you look on the deposit side, on the right-hand side of the balance sheet. Once again, we look at the red columns only, and we see that for checkable deposits, there is a market share of round about 35%. Savings deposits, the market share is more than 50%, and the same is true for savings bonds. And if you look at the total customer deposits, we have a market share of the Savings Bank Finance Group of rather 38%. So, this model has been very, very successful. And even in the financial crisis, the Savings Bank Finance Group, on average, made net profits. Even in 2007 and 2008, this sector, this pillar in the German banking system made positive profits. All the private banks, the credit bank sector, made huge net losses. But nobody is interested in looking at the figures. They just look at the size. And they say, well, these banks are too small. They cannot handle the task of financing large institutions and large companies. Well, that isn't their aim. They would want to finance small and medium-sized enterprises. They are responsible for affordable housing. They are financing new energy models, and they are supporting the local authorities. So from my point of view, and of course I'm biased, because I'm the only German professor of economics with a chair for public financial institutions. Okay, so I have to make that clear. Yes, I'm a bit proud of it, yes. But the model is a good and a functioning model. And my vision is almost never change a working system. Thank you.